Happy Friday, traders. It is 8 a.m. Chicago time. Hey, we've started on time today. 8 a.m. Chicago time on Friday, the 11th of December 2020. Thanks for joining me. A quick mic check. This is a different mic here, a different Bluetooth mic. Let me know how it's working out. Uh, Today, it's episode number 1897. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we see risk off again. Is it? Yeah, I feel like there's like a kind of a echoey quality to it. How about now? Test, 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 test. Turn it up a little bit. Here's the convergenttrading.com, convergenttrading.com pre-market summary. This is an overview of where we are. You can see again today we have risk-off sentiment across the board on the overnight, and mainly driven by the Brexit issues. It looks like from the latest EU Commission chief negotiator, it looks like there's likely to be a high probability of a no-deal Brexit coming. A call that was requested by Prime Minister Johnson to President Macron and Chancellor Merkel was turned down. The markets responded pretty aggressively this morning at about 2 a.m. Chicago time. A lot of crackle and pop in this headset for some reason. Yeah, it's like really weird. So that's where we stand this morning. I'll work on the sound later. It's a brand new headset. In any case, the markets have risk off. We see money moving out of the indices, especially the European ones. You can see the Euro stocks are off 1.19%. The DAX is off 1.64%. And into the Treasuries, the 10-year note slightly up. The bonds are up 13 ticks, and the Bund is up 59 ticks, not very much. The dollar's higher, euro down, pound is down as a result of that news. The overall view of the overnight action, 113,000 contracts in the H1 contract. I rolled yesterday to the March contract. And that's what's being quoted here, 113,000. The range is 46 and a quarter points, quite high, much higher than the usual. And the overnight inventory is at negative 60.5%. Let me switch headsets 1 second. Test 1, 2, 3. All right, back to the original headset. Should be much clearer. Sorry about that. Anyway, for today, again, risk-off sentiment coming in. We're opening in a gap lower this morning. A quick jump into the review segment drops us into what was expected yesterday. The primary scenario yesterday was a push towards the 52 for a drop down into the 2620 point of control, MC point of control. That's the March 2021 MC point of control. We still have about 4 full days, including today, for rollover to be in effect. By Wednesday next week, we should be over this, talking about March versus December, and we should get back towards a normal delta and normal volume, but we have to put up with this for a few days while everybody rolls their contracts forward as a normal process of trading futures. So the primary scenario did not work out at all. The secondary scenario, however, was on point. Dropped to 37, dropped 37. That was what was expected here. Expected it to consolidate at the 37, push up, and come right back into the 3658, 3660, 3660 being the key target. Here's what actually happened yesterday. That was the long I was stalking, and those of you who are in the Head Trader channel on Convergent Trading, we set that trade up and talked about it. Look at that, a drop into 36. Remember, we're looking for 37. The stock zone here, actually should get rid of these stock zones because they're updated for today. 37, 37 was expected again. Right here, 37 was expected, and we went to 36. 36 turnaround. We get this strong rotation, 19 and a half points, a single rotation without one rotation without a single 12 tick pullback, pullback into the prior day's low. And then that sets up another chance to jump on. 51 was a setup for me. 51 and a quarter was a setup for me. Didn't catch all this. It was tough to catch this low, actually, after the impulse down. But 51 quarter was a setup for me. And then back to the point of control, the prior day's point of control, which is also the close area. The prior close was at 61. The prior point of control is 59 something. And that would have been the target for 8 points. Then the market goes into a consolidation, pushes the IB high by a little bit, and then from there it was pretty much balanced for the rest of the session. Pretty decent kurtosis. What yesterday showed us is that we had a really clear excess low at the low here, and the expectation was this is likely to continue climbing in the overnight session to extend this profile out to find excess on the other side. So that's what was expected yesterday. Unfortunately, the delta was completely flat, as you see here, mainly because of the rollover. And I'm looking at the March contract. That translates into what's happening today. Today we finished pretty decent yesterday. Made an attempt at that high again. Finished somewhere in the middle. So basically, yesterday was scenario 2 on the spot. Again, expected it back at 36.60, and we got that from 37. Didn't catch the 37, but it is what it is. It's all right. We come back in. We test this high that we put in on the close, and then we rotate down, consolidate through the Asian session. Then the Europeans come in right here, and then the news comes out on Brexit, no deal, and boom, it drops. We have a clear multi-distribution profile, clear double distribution at the low with a low volume node at the 45, 46 area. And look at where it went right to the went right to the MC point of control I talked about yesterday. Remember, this price was 36.29, was it, in the old contract? Something like that, 36.29. We went right to it on the nose, and we pulled right back. We remain below the below VWAP. We remain at the point of control, and we remain in the gap that we put in on the first day of the month, approximately 2 weeks ago. So we coming into today, we were in a gap down, but we are actually inside of the prior day's range. The 36 is the prior day's low. We're trading at 37.5 currently. We're inside of the prior day's range. We have we did test this all-time high from the 9th of November. That was where the 37 came from, and we are now at it. So the expectation for today, as a result, is that we are likely to see some more volatility coming into today as we did yesterday. And the skew is to the short side. However, the market has been bouncing up every time it has dropped off. Still, the one-time framing on the weekly is still strong, is still bullish, but on the daily we did break the one-time framing. The one-time framing up was broken here, and we are starting to we put in a higher high, and yesterday and today may trigger one-time framing down on the daily. So we're filling this gap here, and we are potentially going to retest lower. We need to keep an eye on a couple things today. The high yesterday is important as, again, it pushes stops above 3670 today. If we get up there, it brings us back into balance. If we get back to 3660, remember last week's point of control is at 3660, and we built a high volume node on top of it this week. So this is a magnet at 3660. Anything above this 3670 area is likely to accelerate and squeeze shorts up to 3685. Did you catch all that? Very important. As we come into today, I expect it to poke into the prior day's range, but I'm looking for it to continue its one-time framing down and push um, towards the lower distribution, towards the point of control down here from a couple weeks ago at 18, and then potentially squeeze down into 3600, 3599. We could see the delta day before yesterday. Yesterday's delta, unfortunately, again, is invalid, but Wednesday's delta is very strongly to the negative side on a wide-ranging body, and we haven't seen a range like that in a while. You could see that the range of this day hasn't been seen since the very beginning of the month. So this is getting a little bit more turbulent. My expectation is that's going to play to the downside. Okay, so this is the composite chart. This is a 1 day per bar RTH only chart that we use to determine where the market stands in terms of its auction. In fact, if I can get this to come up. Yeah, in fact, if we look at just 252 days on the composite just the last year, you can see there's a lot of price discovery here because we are in new all-time highs. We're going to see a lot of price discovery. We don't get to, a fair balanced price until we get down into the 3350s. And so and so that's where that stands. Pay attention to the big picture, align yourself with that, and the small trades take care of themselves. In terms of CT bookmap, really not a lot to talk about here. The depth is still messed up. Order flow and all that during rollover is tricky. We're not seeing anything clear in terms of the depth and so on. So not much to talk about here in terms of levels or anything like that. It's a little bit noisy, but be prepared today for a little bit of volatility on the open, and we're going into the weekend. It is the holiday season, so it's hard to tell how aggressive the market is going to be. But overall, I think we're likely to see some decent opportunities in on today's open. I expect some volatility. Let's look at what's expected for today. By the way, I don't know if we did this last week or not, but every other week my goal is to find out where you are, to have you punch in, type in where you're hailing from. If you feel like doing it, I believe we did it last week. I'm not sure if we had non-farm payrolls, but if you wish to, you can type in where you're at to give you an opportunity to, because we're so anonymous online and we meet online virtually every morning, meaning meeting in a virtual environment every morning. Um,
we don't get to see over our shoulders and look at other people. And this, I like to do this as an opportunity for people to see who's nearby. You can share your tweet handle, your Twitter handle, or some identifying thing. Do not type in your email address or phone number or anything like that. And my hope is that you connect with other people. If push comes to shove, you can reach out to me at futurestrader71.com/contact. If you see someone else, if two people see that they are close by and they want to get connected without sharing private information or personal information, you can just, both of you can just send me a message at futurestrader71.com/contact, and I'll connect you both. This is an important part of my vision and impact on the community is to connect people together. That's what convergent trading and edge clear are all about. So let's take a look at what's expected for today here. Today, we're opening right against the prior low right here. I'm expecting an open auction in range out of value. I'm looking for it to dip down into yesterday's low. I expect it to squeeze some of the shorts back into this gap, but I'm expecting it to get impulsive on the way up. I'm looking for an impulse back, and I'm looking for a push up into 51. We're opening at the 37, so that level's kind of out of the way. I'm looking for a push to 51 before it stalls, and then we hold steady here. We'll get a lower high, lower low on the session. We'll likely get a double distribution profile. I'm expecting this to have a wide distribution at the top, a low volume node, and a smaller distribution at the bottom. This is how I'm looking for the market to come to an end. Somebody again asked me, why do you draw these lines? Why are you trying to predict what the market will do? And I'm not trying to predict what the market will do, but if I gave you a chart, an end of day chart today, right? And it had very little information except for the structure of the market. Wouldn't you feel a lot more confident um, aligning yourself with the market given that chart, right? Of course, I don't have a clue what um, the final market structure is going to look like, but this handles that. It gives me a little bit of a vision of what I should be aiming for, what the best trades, the key trades of the day are. This is why we do this. The secondary is an open that is responsive, drifts back up into 45, potentially into 41, and then consolidates and comes back and sits in the middle. Later in the session, I expect it to push lower as more Brexit surprises or negative surprises come in. We get also a double distribution profile potentially, but to the downside. The tertiary, as we sit on the edge of balance here in between these boxes, the tertiary is an open test drive, consolidate up here, and then squeeze back into balance up at the 3660 and hold steady. That is scenario 3. This is a market that sees prices as low and advantageous to buy, and pushes back up. So these are the 3 key scenarios of the day. I'm not telling you to pick one and just bet the house on it, but if you do get into a trade that is holding one of these key areas, you'll want to have this helps boost your confidence as to what to look for down the line, as opposed to watching your 1-minute chart or your DOM or your order flow after the trade is in and finding 50,000 reasons why you should get out of the trade because it's wrong. Good luck today. Hopefully, you gained something from this today. Hopefully, you worked your way towards your goals this week, and you're getting better and better every week. We're looking for incremental improvement as traders, and that improvement never ends. It continues for life. We never actually perfect the game. This is like golf. You just never get perfect at it. You just get a little bit better and better and better and expose more and more vulnerabilities. And our focus is to get better at those, focus on those. My 20 minutes are up. Good luck, and I'll catch you on Monday. Take care.